Success is not absence of failure, it's persistence through failure. Aisha Tyler, my friends, each and every day, 10 to 15 minutes. Don't worry about how long it takes to master these charts. Just do the work every day. Before you know it, you will be there and you'll make up for all the time you ever spent. But if you don't start today and stick with it, it'll just take you that much longer. Let's jump into these charts. Everything up for the day except Bitcoin. It's pulling back over 4%. Nothing up big today. But let's talk about where we are. We're looking at the S&P 500. Didn't have average volume last week on the weekly. Let's get over here to make sure I'm not screwing this up. There we go. Get up to the weekly here. As we look at the weekly, we have a red down candle. Didn't have average volume. Last time we had average volume, didn't even have it back on the 3rd of February, almost back on the 27th of January. We tapped up to about the high that we hit last week with the green spinning top, and we're going red this week, although we are up for the day barely 0.05%. You can see where we had our big down days on Monday and Tuesday on the 2-day candle there. The big down was Tuesday morning, and again popped up some on, make sure, I don't know why we're doing that. Okay, we popped up some on Wednesday morning. We got a little green spinning top and then rolled back over on Wednesday afternoon. But again, still, and this is on our Heikin-Ashi candlesticks, we can see where the average pace traded and look how much lower it plumed, but ended up the day 0.05% up. Now remember, Heikin-Ashi candlesticks, not open, high, low, close. It's average pace. So again, it's a much easier thing to look at the chart and see where the real momentum is and what the average pace of price movement is. If you don't know about Heikin-Ashi candlesticks, we have a great training. I'll attach it at the end of today's video for all the people that would like to take a really good training. I've got nothing but compliments on it. You will get a kick out of it. Let me tell you where we are right now. Probability of continued down movement, about 60%. We have support at 569. I'm going off the weekly chart here with these numbers. Weekly chart, big money. Resistance is at around the $600 mark. We're currently at 594.54. If you want to keep going short, if you're not already short, if we can push through the 590 mark, then we're expecting about another $10 to $15 of down movement. So again, we're at 594 right now. If you are short at this point, great. We'll continue to keep an eye on this throughout the course of the week. If we can push through that mark at the 590, you can go a little more short. That is where we are. Now, when we say short, what do we mean there? Well, if you've taken our training, you know how to practice trade puts. That is, of course, something you could do. Of course, we have inverse funds. We like the single inverse, which goes up when the S&P goes down. That is SH. And again, there's a lot of things to know about inverse funds while we talk about practice trading. If you've already been trading for a while and you want to do a fractional trade, you could buy 2 shares, spend about $84 or whenever the entry point is. And again, if you lose a few percent, no big deal. Please don't start doing anything until you know what you're doing. There are masters of the market that will take every penny you have. So again, be smart. We're not a stock calling service. We're an education firm. We want you to train. And at the right point, getting into some real money, small portions of real money, like $100, is great. That's what we call fractional trading. When you have a share or two of an inexpensive stock or ETF, or if you get a fractional portion of something like the S&P 500, if your broker allows you to buy fractional shares, then you could buy $100 worth of the S&P 500. And again, practice with that. See how good you think you are. Paper's one thing. Fractional trading is another. You get to practice your entry points, your good till canceled sell orders, entries, exits, all that fun stuff. Find out what you like. If you like stop loss orders, whatever. You can practice all those things. That's the easy, inexpensive way to do it. That's where we are with the S&P. Where are we with the NASDAQ 100? we got about a 65% probability of continued down movement. We see support on this weekly chart at 501. We see resistance at 520. Like I said, we're currently, or may not have said this, we're currently, as the market closed today, 514.56. You can go further short at 510 if we're able to hit those levels and push below. That might be a good point for you if you've not already jumped in and are riding the down movement. And again, it's 65%. Not the best probabilities, but again, if we see it hit that level of 510 and below, and you've got volume pushing it down, that might be something that you want to look at. You can see some consolidation here over the last 2 days, so we'll keep an eye on things. Again, up for the day, 0.24%. Where are we on 20-year U.S. government bonds? Well, we have been tracking up for the week, tracking up strong since Thursday the 20th, starting in the morning and just sort of building. You can see the 6 days of nice up, well, 5 days of nice up movement on the 2-day chart. You can see a nice week this week, already up to average volume, and we still have 2 days left. So that helps with that 70% probability. We see support at 250, wait a minute, pulling off the wrong chart. 70%, we see support at $89, resistance at $95. We are currently at $91.96 right now. And of course, going long, if we can push on up to that $92 mark, you see us hitting on that tomorrow with some good support, then hopefully we would be able to catch somewhere around $3 to $4 of nice up movement before you start hitting some resistance. So think about that. Pay attention. Might be a good thing for you to pull the trigger on a practice trade. Again, watch the volume, watch the candles. You want volume to always back up your price moves. Okay, we will look at gold now. Gold, about a 55% chance, we believe, of further up movement. We see support at 255. We see resistance at 275. We're currently at 269.03. We can see where gold leveled up last week. And again, the high last week, 271.84, 272.32 this week. We are off from that at 269.03. Right now, you can see first day of the latest 2-day candle heading down. We can see where volume on the 2-day chart has been reducing over the last few days. Same on the weekly. See if we get up to average this week. We can see we had above average in the morning as things went down on gold and then recovered a little bit in the afternoon, but with not a lot of volume. Sitting right there on that weekly trend line. We've pushed through it on the 2-day. So again, keep your eye on things. If we can push through that let's see, if we continue to see things at the 269 level, pulling back, okay, down to the 260 level and holding there, then we might consider going long again. We just don't see anything right now with everything being as strong as it's been in gold, it really blowing off all that steam and crashing down. Now, it could, so do keep your eye on things. I'm not pulling any trigger to get long on gold right now or to go short on it. But if I do see support at around that 260 mark where it bounces off, maybe around the 255 or so, and then starts to move up, might be interested in pulling the trigger on a long position on gold. So I don't feel comfortable writing that down to that 260 mark if it's even gonna do that. Only about a 55% chance. But that's all we got on gold right now. What about Bitcoin? 75% chance of continued down movement. It was down today 4.38%. And of course, we talked yesterday about BITI. That is the inverse on Bitcoin. And again, very liquid. You can see, 24 cents apart. So again, not bad at all. It's a $26 ETF. When you do get ready to practice trade shorting Bitcoin, something for you to look at. Where are we on that? About a 75% chance, I said, of continued down movement. We are currently at $63.82. We see support at the $22 level, resistance at the $26 level. And again, if we see some consolidation and up movement to get up and not get through the $25 level and again start to accelerate down, might be a chance to jump back in to a down trade on Bitcoin if you're not already in a down trade. But jumping in right now, again, risky. I mean, it's already jammed down for the day, jamming down the last 2 days. So you might want to see a bit of a pullback and then a hold at the $25 mark to then relaunch another down move. Keep your eye on it. You don't want to catch a falling knife. And that's why we talk about once the move has started, when you try to jump into that, it can be rather tough. That's why you want to see it pull up, hit a level where it does not pass through, and then begin the acceleration down again. Opposite is true for up moves. That is where we are, my friends. And again, what are we really waiting for? What am I waiting for on Bitcoin? I'd much rather go long Bitcoin than going short. I'm just giving you options of things you can practice, trade, and just get used to doing. But I'm waiting for Bitcoin to reset to, again, hit a nice down bubble, in that roll over and start moving up and giving us a beautiful launch point where, again, we see a nice down movement, average or higher than average volume, a green spinning top, beautiful classic turnaround with high volume, and jump into that baby and ride that gravy train. That's what I'm waiting for. Is that going to occur? Sometimes perfect setups occur, sometimes they don't. And when they don't, I just let them move on. You can find thousands of stocks and ETFs to trade. You don't have to try to force a trade. One thing you'll learn if you trade long enough is trying to force a trade will almost always kick you in the ass. God bless, my friends. All the best from the whole team at Charting Wealth.